Hello, everyone. Godro here, and this is Follow the Money, brought to you by Nairametrics. All right, so this is a stock market show, like you very well know, and we do this every Monday on this channel. If you're not following yet, please like and subscribe, as they always say. What a busy week it was for the stock market last week. The Nigerian All-Share Index concluded the trading week ending January 24, gaining around 1.22%. I mean, funny enough, when it comes to stocks or the broader index, a 1.2% gain is actually quite significant. And so, especially when you also compare this to the 2.49% loss that was recorded same period a week ago. So, the All-Share Index closed at still above that psychological 100,000 points, 103,598.3 points. So what essentially drove this? The upward trend was driven basically by a lot of stocks, which I will still get to at some point in this show, a number of stocks that did gain. However, despite the upward trend that we noticed during the week, market activity kind of declined, and what that means is that it wasn't like there was a lot of volume trading. So sometimes when shares do go up but volume is thin, can be a signal that maybe market activity wasn't that much, and the share price gain may not be sustained. And so we kind of noticed that during the week as well, with trading volume decreasing by 3.78%, falling from about 2.2 billion shares to 2.1 billion shares exchanged. Market capitalization, however, did see an increase, going from 62.8 trillion to 63.6 trillion naira last week. So what that means again is that the total value of shares on the Nigerian exchange as at last week, of course, the week ending January 24th, was about 63.6 trillion naira. Now, that is still very much lower than GDP, still around 30 plus percent of GDP or thereabouts. So, compare that to most advanced stock markets where they have the market valuation of their stocks way higher than the country's GDP. So still a long way to go for Nigerian stocks. That's also because we have a lot of companies that are not quoted on the stock market. Last week, we did also notice 44 stocks appreciated during the week compared to 33 the week before. So you had more gainers compared to the week before, while we had 44 stocks post losses compared to 57 stocks the week before. So in terms of the broader indexes or the sub-indexes, I beg your pardon, the NGX Premium Index, which is the index of the big boys, experienced a strong rally of 2.56%, largely driven by gains from some of the major players in that index, including that index at the likes of UBA, MTN, Dangote Cement, Zenith Bank, Access Corp. And so most of these guys posted gains, week to date gains of above 5%. So that kind of helped push the premium index forward. So if you're a shareholder in UBA, MTN, Zenith, and Access Corp, then you probably ended the week on the positive note for those stocks. Now, the NGX 30 index, which is the index for 30 of the most capitalized stocks, also rose 1.58% during the week, while the main board index sort of strips out some other stocks. This particular index just rose slightly by 0.54%. So in terms of other sub-indexes, the banking index gained by 4.4%. Of course, that was driven largely by the likes of Fidelity Bank, UBA, Zenith, and Access, all posting above 4% gains or over 5% gains in some cases. The industrial goods index also rose slightly. Of course, that's where you have the likes of Lafarge and Dangote Cement by 0.12%. But the insurance index, which has been that index that has been essentially moving stocks forward, posted a slight decline last week at 1.2%. Of course, this was driven by some of the leaders this year so far. Sony Assurance, which has been basically one of the market leaders in terms of share price appreciation, that dropped by about 14% during the week. So we're gonna get to top gainers and losers straight up. So I think we should just start with the losers first, right? Not the gainers. So, who were the most significant losers last week? So, I'm going to run through 10 of them. So, if these stocks are in your portfolio, then be rest assured that you must have posted some losses. So, Nimet International lost 9.6% last week, and then that's followed by Multiverse. A mining and exploration company lost 9.87% last week. And of course, Morrison Industries lost 9.98% last week, rounding off the three stocks that lost at least 10% or below. Now, Honeywell Flour Mills, they were in the news for a bit over a couple of weeks ago. They're down 11.11% to 8.8 naira. Ikeja Hotel also down 13.3% to 11.7 naira. These are the owners of Sheraton Hotel and the Sun International Hotel, the Federal Palace Hotel, as they like to call it. They were down 13.3% as well. Cornerstone Insurance, another major insurance company, down 14% last week. Abe Mortgage Bank down 14.6%. John Holt also down 18.47%, while Unicel Interlinked also lost 18.9%. And then rounding up the top loser last week was Suno Assurance. Suno Assurance lost 25.11% during the week. This has been like the top gainer for some time now. So no surprises here that appears investors seem to be taking some kind of profit off the table for Suno Assurance. I mean, they were one of the better performing stocks in the last few weeks, like I mentioned. If you go to some of the previous episodes that I've had, you would see that they were one of the top gainers. But this year has been very rough for Suno Assurance. In fact, I think 2 weeks ago, Suno Assurance lost about 36% or so in terms of share price depreciation. So it looks like investors are dumping it. That's part of what I always talk about penny stocks. You got to be very careful when you're buying penny stocks. They can always surge. They can always experience significant price surges, but at the same time, they get dumped as well. And when they get dumped, it's always very difficult to find who's going to buy them. And then the floor they just keep falling. And so you've seen them crashing by over 50%, at least over the last 2 weeks or thereabout. All right, so back to the top gainers. This is where we all want to be. We all want to own stocks that gain. And so we start from the bottom all the way to the top. CAPLC, Chemical Allied Paints, one of my favorite companies, very solid stock, always producing, always profitable, and always paying dividend. That stock was up 8.5% last week to 47.75. I'm going to paying attention to that stock over the next few weeks. Maybe, who knows, maybe it might jump into my radar. And of course, you have Chelarams up 10% to 4 naira per share. While Guinness had some big news during the week with your earnings. I'm going to speak to that in a bit. Guinness up 10%. Looks like investors like what they saw. Closed at 77 naira per share. Transcorp also was in the news with even though it was their subsidiary that had results out, but Transcorp was up 10% last week to 52 naira per share. Universal Insurance, they've been up lately. Another penny stock. You want to be careful about that one. Up 11.11% to 0.7 naira, which is 70 kobo per share. DAC Communications also up 13.5% to 84 kobo per share, while Royal Exchange rounds up some of the penny stocks that we've had that joined the top gainers during the week, up 14.6% to 1 naira per share. 1 naira and 2 kobo per share. Of course, Coronation Insurance, one of the top insurance companies, up 15.32% to 2 naira 6 kobo per share. And then UPDC also rose 19%. And then, I forgot, one more penny stock, Square. Square was the top gainers last week, gaining a whopping 60%, 59.68% to be precise, suggesting that it gained about 10% every day last week. So those are the top 10 gainers and losers of the week. I don't know, did you have any stocks that were part of this, your gainers and losers? I mean, like, was your portfolio in the green or in the red last week? Mine was in the green, so I really don't know about you. All right, so we go right into the second segment of this show where we'll talk about performances of or talk about some of the major news items that popped last week. So Livestock Feed. Livestock Feed was in the news at Nairametrics last week. Why was that? And that's because it's been surging. And it's having a share price surge of about 50% this January alone, making it 3 consecutive week of gains. So looks like this agro-allied company has something going on in there that we don't really know. Could it be maybe the results? I mean, we did look at the results and we kind of noticed that the company, when it declared its result last October, we saw a 99% increase in revenue year on year to about 28.6 billion naira. And so, I mean, agro-allied companies have had a very good year so far, whether it's Okomo Oil or Presco. Not even a good year. They've had very good years. But Livestock Feed has just been that one that has been lurking behind. But seems like its time is here, and that is also now being buttressed by its fundamentals. And of course, pre-tax profits also up to 2.1 billion from about 58.6 million a year earlier. So that just puts stuff into context for you. And it looks like some of their major markets are like Lagos and Aba, and those markets contribute about 46 to 36% of revenues, during the year. Is this the reason why Livestock Feed has been surging? I don't know, but kind of looks like this is a stock that is making its investors very happy at the moment. This stock opened January at about 1.85 naira per share and remained stagnant for like January. When I mean January, I mean January 2024. Last year, this stock opened about 1.85 naira per share and was stagnant, pretty much stagnant for like the first 2 quarters of last year. And then all of a sudden, it just started to climb around June and went up by October. It was 3.50 naira per share and then ended at about 3.87 naira per share. And then by the end of the year, this stock was hitting about 4 naira per share. I'm making it one of the best performing stocks last year. Currently, this January, this stock is doing what? Guess what? 6 naira per share. So in 1 year, this stock has risen 5-fold from about 1.85 naira to about 6 naira per share at the moment. So this is one stock to watch. 6 naira per share, Livestock Feeds. Do you know what's happening there? You got any insight why Livestock Feed is doing this well? You probably just want to share with us and let us know if you have something that we don't know. But looks like a lot of fundamentals pushing Livestock Feeds performance so far. Investors kind of love the stocks, and we'll be trying to see how it performs. By the way, I also like to know whether stocks are probably expensive or not. And I always say here that the only way you know whether a stock is expensive, or one of the major ways that you know whether a stock is expensive, is if you look at its price to earnings ratio. And so let's try and look at price to earnings ratio for Livestock Feed and see whether this is a stock that is expensive or cheap. I'm just going to go in there in a bit. So Livestock Feeds currently trading at a price to earnings ratio of 15.7x. So that kind of makes it look like it's in the expensive category. Don't really like stocks when they trade above 10x. Not that I don't like them, but I mean, when stock trades above 10x, suggests that perhaps maybe it is expensive. Its EV to EBITDA multiple is also 5.6x. So who knows? Is there a potential acquisition coming up here in this stock? That's one to look at. Now, next on the news was Oando. Oando, as the name signifies, also has been experiencing a share price surge this January. Share price has risen 14% in the third week of January, increasing from an opening price of about 62.5 naira to 71.8 naira per share. Oando has had a lot of good news popping up over the last few weeks. And, one of the most important ones is its fundamentals. So in terms of fundamentals, the company reported a post-tax profit of 13.6 billion for the third quarter of 2024, and that has sort of bowed the share price. Investors kind of like what they're seeing. So 9 months so far, the company's profit before tax has risen to about 76.2 billion naira. For the third quarter, revenue hit 1.1 trillion. up 15.7%, taking total revenue for the first 9 months of the year to 3 trillion. So Oando officially in the trillion club when it comes to revenue earned, in the year. So pretty much solid stuff for the stock so far. I'm not sure whether that signifies that it's a buying opportunity. Oando seems pretty much expensive, but for a lot of investors that have owned this stock for years and have been waiting for this stock to perform, I think none of them would mind the sort of share price increases they are seeing at the moment. Price to earnings ratio for Oando is currently 31.8x to be specific. So that sounds like it's at the expensive territory. But I mean, some would also tell you that, look, if you look at a lot of the assets that they've been acquiring, and those assets, the profit or the gains that they can get from those assets hasn't actually started filtering into their performances yet. So that is probably why people are assigning these sort of multiples to Oando shares. 31 times our earnings at the moment. So is this where 71 or so? Is that maybe perhaps the intrinsic value of the stock? I don't know. This stock has actually hit 80 something naira before. And so I wouldn't be surprised if it falls back to that level. In fact, its year high is around 80 something naira per share. No surprises if it goes back to those sort of levels. Intraday high for the stock has actually even hit 90 naira plus. So, but if you're somebody who's looking for some kind of value bargain, not really sure whether Oando gives you that sort of value bargain at the moment. But if you're somebody who loves hot stocks and you're just out there for share price appreciation, maybe this is worth the risk if you want to take it. But of course, buyer beware. And Oando was also in the news for something also serious last week. They announced, via a circular on the exchange, that its subsidiary Oando Energy Resources was awarded the operatorship. That's the word they use, operatorship of Block KON13 in Angola's onshore Kwanza Basin. This follows Oando's successful acquisition, of course, of Ajib Oil's onshore assets in Nigeria. So the recent operatorship of Block KON was given to OER, according to the company, after a competitive bid. KON is located in Angola, and from what we gather, that whole basin, that whole Kwanza onshore basin, is actually known for its pre-salt and post-salt formations, with estimated resources of about 770 to 1,100 million barrels per day. So looks like an incredible operatorship that they've just gotten there in OER. So according to OER, his role as an operator, it will lead development of this block, holding a 45% participation interest, while Efimax and Sonogol, I guess these are local operators as well in Angola, will participate as co-ventures with 30% and 15% interest respectively. So Oando signing another major deal during the week, that may have also contributed to the share price increase that they recorded. Also in the news during the week was Transcorp Power. Yeah, so Transcorp Power, subsidiary of Transcorp Group or Transnational Corporation, also released its 2024 results during the week. According to the numbers that we saw, the company recorded a 114.7% year-on-year growth in pre-tax profit, hitting for 113.28 billion naira pre-tax profit. That is a power generation company listed on the exchange, and that's from a humongous profit there. Revenue surged to 305.9 billion, up 115% as well year on year. We looked into the breakdown of the numbers. Revenue 305 billion, up 115%, and gross profit 142 billion, up 88%. Operating profit, one of my favorite gauges here, up as well 76% to 114 billion. Finance cost was also up. However, that wasn't enough to stop the company from hitting a 164% increase in profit after tax to 80 billion. So earnings per share for Transcorp Power currently at 10 naira per share. I do recall at some point we were wondering whether Transcorp Power was also, perhaps maybe slightly overvalued because of its share price appreciation. But looks like the way that it is growing in terms of its numbers could perhaps explain why you're seeing these sort of multiples. Currently trading at the multiple of 32x as well, clearly at that expensive territory. But looks like, with the sort of numbers that they're pushing on, investors really like what they are seeing. So assigning very good multiples to the company's shares. So I don't know. I kind of like, Transcorp Power, also like Guinness Power. Those are the two major power generating companies listed on the exchange. And the reason why you like the stocks is they operate at, the less risky level of the power sector value chain. At the moment, the risky side is really the distribution side. But at the power generation side, they seem to find a way of posting profits. Even though if you look deeper in the balance sheet, they still have receivables from government, which oftentimes affects their cash flow. But these guys generate significant amount of profit at very high profit margins. And so that's why the share price is doing well. And for those two stocks, they seem to also trade at very high earnings multiple. And so good stuff there for shareholders of Transcorp. By the way, Transcorp Power also posted a return on average equity of about 50 something percent. So those are very, very solid numbers for this company. We'll be interested to see what sort of dividend they plan to pay this year, if any. Now we go straight to Guinness. Guinness, one of Nigeria's largest brewers, had some struggles over the last few years. Of course, just the same way most fast-moving consumer goods companies have had with exchange rate. But sometime around June last year, Guinness did announce that they were going to have a takeover. There was an acquisition by the Tolerant Group acquiring Diageo's shares. And from what we gather, looks like most of the takeover is largely completed with changes, passing on the baton with new managers or new management team installed in Guinness. And straight out of the block, appears that we're seeing major improvements in the way the numbers are looking for Guinness. And so Guinness released their their second quarter numbers, second quarter ending December 2024. So Guinness year end is usually June 30th of every year. So the second quarter would always be in December, not the typical calendar year that you're familiar with. But Guinness released its numbers and pre-tax, they posted a pre-tax profit of about 8.2 billion. I beg your pardon. It posted a pre-tax profit of 20.1 billion, which was a major reversal from 8.2 billion that was reported the same period a year ago. And so solid numbers for them. It's also the first quarterly profit that Guinness has posted since September 2023, which was the first quarter for 2023 to /2024 numbers. So since then, it's been quarterly losses all the way for Guinness. So they posted pretty strong numbers, and now it looks like a reversal of fortune. And we did dig into their numbers to see what majorly happened or what drove this profit. And of course, second quarter profit helped increase half-year profits to about 4.1 billion naira, enabling the company swing to its first half profits. The first profit for the first half of the year since 2022, right? I mean, of course, a year has two halves, so the first half and the second half. So they're now into profit at least in the first half of the year, making it possible for them to probably hit a full year profit by the end of the year. Pre-tax profit for full year 2024 was 4.1 billion. So if they've done 4.4 billion for just half year compared to 4.1 billion pre-tax profit the year before, makes it look like Guinness is going to have a very good year this year. The company also reported revenue of 133.7 billion for the quarter, bringing the year-to-date revenue to 259 billion naira. Solid numbers there for this company. And despite the challenges they are having, Guinness is posting 260 billion. Can you think about that? In revenue alone this year. And so domestic sales, of course, still accounts for Guinness's major revenue. Over almost 100% of its sales come from domestic, at least from the Nigerian market. We did also notice that company's gross profit was up 28.45%. year on year, hitting 59 billion as well, while operating profit declined slightly to 11.2 billion, down from 16 0.3 billion the previous year. I like operating profit a lot, you know that. But what were the major drivers, for profitability for Guinness? And from what we saw, many of the major drivers, of course, was their ability to increase revenue, which helped push down a surge in operating expenses. So that really helped. And of course, Guinness also was also helped by its finance charges. So finance charges was a lot lower, or net finance cost was a lot lower than what it incurred the year before. So Guinness is looking like one of those stocks that might post some kind of share price appreciation over the next few weeks. Already, share price gained about 10% last week. I think I did mention that earlier. And so expect to see investors want to go again into the stocks. I do hear that they're about to launch a mandatory takeover of some of the shares which is typically happens. So when you have a major power block come in and acquire shares of one of the majority owners of the company, like Toleram has acquired shares of Diageo, they are also required to make a mandatory takeover, an MTO, of shares of other existing shareholders who are willing to sell. So if those ones want to sell, then they can buy up their shares. That could also be one of the reasons why Guinness share price has been performing well last week. In terms of price earnings ratio, because Guinness posted a loss the year before, you probably won't see a positive price earnings ratio there. But in terms of valuation, at 77 naira per share, it's trading at 7.9x its EV to EBITDA multiple, which is slightly high. But of course, you do know that this is a stock that is being taken over. And so no surprises why the share price is now at least a 1-year high of 77 naira. If you bought the stock when they had that acquisition, it was around 60 plus naira or thereabout. This time last year, Guinness was trading at around 40 something naira, or less than 45 naira per share. So you can imagine how much you would have made if you had taken position in Guinness a year ago. But I mean, that's what happens, and that's why this is Follow the Money. I'm going to be giving you stock picks once in a while. Stock picks for last week, in case you missed some of my stock picks or stocks that are on my radar, stocks that I'm buying. I had mentioned that I was looking at Nestle as one of those shares. I was looking at MTN as well, of two major stocks that seem to be on my radar. Looking at including in my portfolio. Guinness, not yet on my radar, but closely watching how this stock is performing. I really like what I've seen with their numbers. Livestock Feed as well. I like what I'm seeing with their numbers. There are some banking stocks as well here and there that seem to be doing pretty well. I think I like what I'm seeing in Wema Bank. Not currently, on my list, but I like what I'm seeing at Wema Bank. Fidelity was already in my portfolio, so continues to be in my portfolio. Access, already in my portfolio. UBA, First Bank, most of the Fugals already in my portfolio. But we tend to look out for those new ones that can give us the kind of return that we're looking for. So at the moment, appears Nestle and MTN are those two stocks that we're looking at. Watch out for Follow the Money next week so that we can give you more of our stock picks. And then who knows, maybe if you think, if you also have your own stock picks, do share so that our viewers and anybody else can also look at it. Let's see why these stocks are in your own portfolio. This has been Follow the Money, brought to you by Nairametrics. My name remains Ugo Dre. We do this every Monday on this channel. Like, subscribe, follow. Bye.